What's up, party people? My name is Sunny Ray. This is the Sunny Ray Show. I'm back with yet another day full of interviews. My first guest is Eddy Travia. I was just telling Eddy, I kind of feel like I know Eddy. He's been in the Bitcoin crypto space for a very, very long time, and I feel like we've followed each other on social media or something. But he's a name that I think a lot of people know about. Eddy has a very, very interesting background. He's the man behind the world's first blockchain IPO. And today we're going to talk about how a Shanghai private equity investor listed Coinsilium in London in 2015. The ticker's coined before the world was even ready. So help me welcome Eddy. Eddy, how you doing, bud?
Very good. Thank you, Sunny, for having me.
Yeah, good to have you here. So where in the world are you calling in from? Is it Singapore today or are you traveling?
No, I'm in Singapore. Yes, correct.
You're in Singapore, okay. I hope your kids aren't playing video games still, because we had a little hiccup, but it's okay. So Eddy, let's kick off. What's Coinsilium? Why should people care? Yes, start us off there. We'll keep it short and kind of high level for now, but then go deeper later.
Sure. So, as you were saying, I've been in this space for a long time and co-founded Coinsilium Group Limited in 2014. And in 2015, as you were saying, we're the first company to IPO with a clear blockchain focus. At the time, it was mostly investment, but then it grew. We broadened the scope to advisory and to helping strategically companies to grow and backing innovation mainly. And now we're focusing on what we call frontier technologies. We're looking at agentic AI, we're looking at prediction markets and decentralized finance. So we have built a clear experience in the world of helping entrepreneurs along the way, and specifically in this area of blockchain technology and now what we call frontier technologies.
I like that. I like that term as well, frontier technologies. So Eddy, let's take it back a little bit. So you spent, about 8 years in private equity in Greater China before any of this. So what did
Mhm.
Shanghai era deal making teach you that still shapes how you evaluate frontier tech founders today?
Oh well, it was definitely a very steep learning curve. I was kind of thrown in the in a very exciting years for China. For those who may remember, uh, this is 2004 2006, and this is when a lot of the very famous companies today, like Baidu, like Alibaba, started taking shape. And I was in that scene. I was in the scene of digital companies, and that was very exciting. But at the same time, very competitive. And obviously, for me, being abroad for the first time, living in Asia, it was both exciting and a little bit challenging. But to be honest, very rewarding and very at the end of the day, met my wife in Shanghai, and basically spent my life in Asia, mostly in Asia since then. So I guess that tells what happened then, and a lot of
And you were saying you were in
benefits.
Hong Kong, right?
I
Before as
was
well, and now you're in Singapore. So
yes, yeah. I
beautiful.
spent I spent the last now 22 years in Asia. At some point, of course, for Coinsilium, as I was spending more time in London than I was spending with my family in Asia. But
Mm.
that's normal because we were building a company, and it required as much time as possible from my part as a co-founder. And also, it was very active part of the of the sector in general. Everything was getting built at the time. But yes, in terms of living, I've been basically living in Asia now for that time.
Awesome, awesome. So, a software engineer friend told you about Bitcoin, what, in late
Hmm.
2012, right? While you were both French expats living in China. So, what did he actually say that made a, private equity guy look twice?
Well, I think like many people that came into this space, when he talked about Bitcoin at the beginning, I was very skeptical. I think the very interesting thing about Bitcoin is that the first thing it touches upon is money. which is obviously such an important part of our life, right? So when people tell you this is electronic money, but the reason I would say the reason why I was very interested is that um, I had been looking. I was an internet entrepreneur back in the late '90s, and I had been looking at crowdfunding, or let's say innovative ways companies and entrepreneurs to get funded, to get financed. So that was my angle from the start. I said, okay, if this is a new currency, does it help in that area? Does it help in funding entrepreneurs and creating opportunities for builders around the world? And when I realized it could happen, I mean, obviously we're late 2012, then 2013 was very early in the Bitcoin development scene. Um, I don't know. I felt it could happen, and that's why I co-founded. I would say probably the first virtual incubator of startups, Bitcoin startups, in 2013, and later the first conference, organized conference in Asia, in Singapore. It was called Bitcoin Singapore 2013, and that happened in November 15, 2013. Yeah.
What do you remember about pulling that room together at a time when, almost nobody took this seriously?
Oh yes, we got many doors shut on your face. We had many people saying we don't want to know about Bitcoin, or we don't believe this is something serious, or we're not interested. I guess most people who lived through that area, through that era, the first years remember this. It was highly controversial. In many ways, reminded me of the early years of the internet, when there was a lot of controversy about the usage of internet, supporting illicit activities. And then with Bitcoin, which is about money, obviously, it also created that kind of controversy. This is for people trying to evade taxes or do illicit things, etc. So we had a lot of pushback. Um, but the but the great thing is that the small community at the time was extremely supportive, and I guess all this setback was helping in the fact that we were maybe a bit stronger as a community in the early days.
Yeah, that's really interesting. And then, Eddie, I was going to ask you, so Seedcoin was arguably the world's first Bitcoin startup incubator, right? So what did the
Yes.
earliest pitches look like in 2013, and what separated the founders who survived from the ones who vanished?
So yeah, that's a very interesting question. Just for the conference in Singapore, we organized a pitch session. So before the conference, and not in the area of the conference, but surrounding in Marina Bay. And it was very interesting because actually we quite quite senior VCs coming. I mean, by senior, I mean with working on, like, I think one of them was advising the Snapchat founder already, and it was there was some interest from the VC community, because obviously VC community is always looking out for the next thing, right? But I think in terms of pitching, we had a lot of wallets with a lot of exchanges, or people already thinking about maybe some form of derivatives, or shorting Bitcoin, or this kind of things. It was already very finance related, of course, uh, but a lot of builders, developers coming from the payment, and the nice thing, which again reminded me of the internet, is that we also had a bit less dreamers. A lot of people dreaming very big in the space, and that was very exciting, to be honest. But yeah, a lot of tech founders building the infrastructure of the early, or the rails of the early days of Bitcoin.
Hey, Eddie, just to talk about something that happened, I guess, in the last 24 hours, how do you think incidents like the cold card breach change the way serious Bitcoin builders should think about wallet, trust, operational security, and vendor risk?
Yeah, I mean, as you know, we always had challenges in terms of potential vulnerabilities. It's true that for Bitcoin there was a feeling a bit of more security, especially when it comes to cold wallets. So it's kind of a bit disappointing that this is coming up now. But obviously, the entropy issues of certain cold wallets. I mean, it's something until it happens, like it occurred this time. I don't know if it has been helped or not by AI programs, maybe not, but when it happens, you feel like, okay, this is something we could have solved earlier on, right? But through number generators and so forth. So I think it's a very good lesson in the fact that, especially the Bitcoin scene, I've always been very, very focused on security. I remember in some meetups I organized in Asia, in Macau specifically, with people who were so paranoid with security. It was unbelievable. I mean, I never seen such a degree of security concern ever before. But unfortunately, yes, it's not enough. And definitely, yeah, keeping on the lookout for this kind of vulnerabilities would be great. But unfortunately, it's you cannot change the past. So here we are.
In 2014, you signed startup investment term sheets denominated in Bitcoin itself. What did the
Yes.
lawyers say, and would you structure a deal that way again today?
Probably not. Um, well, we were lucky because our lawyer was actually one of the members, early members. Or he was in England, and he was one of the early members of the one of the earliest Bitcoin associations in the UK, and he was already lobbying a bit, in the UK. So we had no problem with our lawyer, because our lawyer, who's now based in Hong Kong, was actually very much involved in this space, and is still involved in this. So we didn't go to a typical law firm, because obviously typical law firms in 2013 would have never done a term sheet in Bitcoin, most probably. Well, the lesson we learned, unfortunately, was that when you do a term sheet in a currency that started going down, because we signed those term sheet late 2013, early 2014, and it coincided with the MTGOX event, and then Bitcoin price went down for two years and a half, basically. So from $1,000 peak in December 2013 to 250 in the summer, or about 2014. So we were signing term sheet, and people were wanting to raise $50,000, $100,000. But then once they get the Bitcoin, if they sold it, most of them sold it on the way down, which of course help their situation. And at the same time, at that time, the ecosystem was smaller, so you couldn't spend Bitcoin that much. We were spending Bitcoin sometimes in some meetups, in some events, uh, Bitcoin New York or whatever, but we couldn't spend really Bitcoin easily on wages, on rent, of course, or various invoices of hosting, etc. So I guess it was not the best thing at the time. But the reason why we wouldn't do it today, obviously, is because we don't want to impose kind of an exchange risk on anyone. And at the same time, as we know, Bitcoin has changed from a regular, let's say, initially in 2013, it was still very much a payment mechanism, and today it's more store of value. So obviously, we don't look at the asset the same way.
That makes a lot of sense, Eddy. Can you compare, I guess, the kind of like the landscape, then and now? Like, what's actually improved and what's just gotten louder?
Wow, I mean, if we compare 2013 to now, it's an incredible difference. I mean, it's a huge gap. I mean, in
And Eddy, I
2013,
forgot. Sorry, I was
yes,
going to also mention that in 2014, you were also named one of the top 3 most influential investors, right? Alongside Roger Ver and Mark Andreessen. So, you had like a front row seat, I guess. So, yeah, just really curious to hear your answer.
yeah, and Brian Armstrong got the prize on behalf of Mark Andreessen, because he was the one at the conference in Amsterdam at the time. So yeah, it's a huge gap, because in 2013 and 14 you couldn't really expect that institutions would take it so seriously. This was really a struggle at the time. So I would say what has improved, obviously, is the fact that millions more people know about it. Between then and now, millions of people have used it. I've used it to pay. I've used it to trade. So there's been a huge adoption, which is still too low. I mean, everyone in the sector knows that we still need to go beyond that. But still, it has been an incredible curve for adoption. I think the sentiment has changed a lot. I mean, obviously, mostly in the US, I would say that makes a very big shift in the last couple of years in the US with a real, a White House which is really pushing for certain laws and is really saying out loud, this is a very important technology. It's important for our future. And then you have all the stablecoin industry as well building around that. I remember very well the early days of USDT, which was originally on Omnicoin or Tether Omnicoin, and and the backlash. A lot of people are saying we don't want dollar on blockchain. We don't want dollar in our ecosystem, and this is never going to work. And by many accounts, stable coins, Tether, Circle, these are some of the most successful projects in the space. So yeah, so impossible to do a list, but I would say the outlook and the effect on the world has been already quite very important. And I think this transformational dimension will continue, and this effect will continue in the future. And we hopefully we play a little part of in that.
I see you guys playing a big part in it. But I was gonna say, so in 2025, you launched Forza, Coinsilium,
Mhm.
Gibraltar, Bitcoin Treasury. I guess 12 years after Cyprus, right? So what finally convinced you the company balance sheet itself should be Bitcoin?
Um, yeah, so Cyprus, just to put some context, Cyprus was a bail-in in 2013 when Cyprus finances were in trouble and the government decided to take money from the banks and depositors funds. And at the time I remember reading an article that actually mentioned Bitcoin, and that was probably one of the first times I saw Bitcoin mentioned in the media. It was very interesting. At the time they were talking about Bitcoin ATMs. I don't know if you remember Lamassu, all that.
Of
So
course.
they were talking about this very specifically. And so yeah, so that's just a background on Cyprus. Well, I mean, to be honest, 2025 was basically the year when it could be done. We would have loved to do it earlier, to raise funds, buy Bitcoin, etc. But I think in 2025 something clicked. There was a convergence. Obviously, strategy had been done for a few years already, but I think in 2025 in the UK and in other parts of the world, people realize, well, maybe there is something to helping public companies buy and hold Bitcoin on the long term. And we obviously we had been listed for 10 years. We had a very good knowledge about Bitcoin. So we felt and we had been talking about this with our brokers anyway before that in wave of intense interest in the space in Bitcoin treasury companies. So we were basically ready and meeting of time and minds, and yeah, and we managed to raise about $20 million in a couple of months, or between May and August, so 2 3 months. And we bought Bitcoin, obviously, which we hold in our Gibraltar subsidiary called Forza. Yes.
Interesting. Interesting. You guys, yeah, I guess you touched on the Coinbase, sorry, on the Cypress piece, but I was gonna say the other half of that switch was also like kind of Coinbase's 2013 funding round, right? So I was gonna ask you, why did the
Yes. Yes.
institutional validation, matter so much to you as an allocator, and does it still?
Well, it did because of my background. Because remember, at the time I was in China talking to funds every day and looking for digital media or digital companies or internet ventures and so forth. So so my friend talks about Bitcoin. As I said, as many people, I was a bit skeptical. Like, is this really serious? What is this? How can they create money out of air? Whatever. So the usual questions of Bitcoin, which then I would have to answer in all the meetups we organized. And when I saw Coinbase in 2013, as I said, I couldn't go to the San Jose conference in 2013 because I was in France at the time. but I knew about Coinbase. There were only a few companies at the time, and obviously Coinbase was already an important one. And they managed to raise funds, including, if I remember correctly, some Chinese, or maybe not Chinese, but foreign funds in China, or with some activity in China somehow. So I realized, okay, and again, under my lens of investor and trying to help entrepreneurs, I thought, if Coinbase, this small company, is successfully raising a round of a few $1 million, I don't remember how much they were raising, maybe $5 million, then it means we could help more entrepreneurs do that. So that exactly my thought process was, if Coinbase can do it, others can do it, and so we're going to build an incubator that's going to help others do it. Basically, that was the thought process there. Yeah.
And you've now watched what, like three, four full Bitcoin cycles as an
Cycles.
investor. What does a
Yes.
bear market reveal about a founder that maybe a bull market hides?
Oh well, unfortunately, bull market hides everything. you know, Bull market is probably the worst time to invest in anything. I mean, interestingly, so obviously it says a lot about the founders when they are in the bear market, and it says a lot about anyone in this space, because every every crypto winter, we have companies that go down, that close, etc. That and it- and I think actually that kind of cleansing process has actually been very useful for the industry, because obviously the problem with the bull market is it attracts a lot of opportunistic people who may only be interested in the some kind of financial uh, outcome, purely financial outcome, I would say, which is not necessarily a bad thing. But in our space, if you come from early on, you have other other concerns or other interests. And at the end of the day, um, this kind of the crypto winters are going to wash out a lot of the uh, opportunistic attitudes, and keep the people who are really building for the long term, obviously. And so I think it has been quite healthy actually to have these cycles. I mean, obviously we cannot be in a bull cycle for 10 years or even for too long, um, because it could create some behavioral problems, I would say. So yeah, so that's really what I think. I think obviously it shows fortitude from the entrepreneurs, which is very needed for any entrepreneur, for any sector. That not doesn't apply only to cryptocurrency or digital assets. Any sector in tech or others, you need to be strong, because there is always a time in your life as an entrepreneur, where things go bad, go wrong, go hard. And I remember, Elon Musk replying on a question, "What do you need to be a good entrepreneur?" And he says, "Suffer." And I agree. If you suffered as an entrepreneur, it's very difficult to make it.
Wise words. Eddie, another question I have for you was like, what's the biggest thing you believed about, Bitcoin or blockchain in 2013 that turned out to be wrong, and what replaced it?
Mm. Well, as I was saying, originally I was not. I don't think I could have imagined Bitcoin to be that, that successful in terms of, for example, reaching these kind of price levels, reaching the fact that central banks look at it and large institutions are holding it and so forth. So I think a lot of positive. But what could I have believed that never happened? Um, well, I mean, it 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 it's I mean, obviously we know now. I mean, we can see that it was really a payment mechanism, but the financial asset replaced fairly quickly the payment mechanism and the payment part. Um, and I don't know if I had any preconception. I don't remember now if I had preconception about where this would go. But I guess I didn't. I thought the social, maybe the social part of the payment mechanism. I mean, for example, one of very early use cases of Bitcoin was cross-border payments, and many startups, that we knew were going for cross-border payments, and this was a very recurring use case in the early days. I would say 2014, 2016. And I think the problem was very well identified, but I think the solution was not completely correct because there were a lot of hidden costs. You know, people said, yes, of course, I could send 1 Bitcoin to my cousin in France. Of course, it was costing a very small fee, especially when Bitcoin was lower price. But in reality, you had all this cost of going back to euro, buying the Bitcoin in the first place, and my cousin changing it, finding an exchange. Then the exchange takes a fee, and then maybe the bank refuses to get that money because it's not yet accepted, etc. So cross border payment has been, I guess, a problem, and to be honest, today cross border payment is fixed by Tether more than anything else, more than Bitcoin. So I guess that could be one thing that we thought could happen and never really happened.
Or took a different form rather, like I guess in the form of
Took,
Tether. Yeah, really interesting.
yes, different, yeah, using blockchain technology, of course, but not Bitcoin itself. Yeah.
Yeah. So Eddie, Coinsilium describes itself as explicitly not a pure play, Bitcoin treasury company, right? So
Hmm.
where did you
Hmm.
land on the treasury company wave, like a durable corporate model, or kind of like an artifact of this cycle? Like what's your kind of thesis or outlook on it? I mean, there's a lot of heat right now, obviously around strategy and everything.
Yes, I mean we're trying to explain this very early on because we have been in this space for a long time, so we know that there are phases, there are cycles, and so we I mean we it's not, to be honest, it's not that hard to guess, but we could feel that the cycle would change. I mean, the problem with a pure play Bitcoin uh, treasury company is that it relies on one main thing, which is either raising money to buy Bitcoin, or somewhere it relies on the retail interest for Bitcoin. Now, in the US, strategy has much more money than anyone else, and it has many avenues and many ways to make things happen that the rest of the world doesn't have. And in the UK, we had a good time, again, a good period when there was a huge, again, retail interest. That's very important. I mean, we there may have been institutions involved, but to be honest, most of the interest was by retail, and it was not necessarily a short-term interest. That's fine. Many of our retail shareholders are still there, and in other companies they're still there, so that's great. But today, if you go back to the market, and especially I would say outside of the US, there is basically no demand for Bitcoin. It's a usual meme of people queuing to buy Bitcoin at 125,000 and no one buying at 65,000. We're exactly in that position again, like every cycle. So it means it's not a model that can work forever unless you have all the maybe tools or financial instruments that a huge corporation like Strategy has. And we are a smaller player, obviously, and we know that we raised enough to buy about 180 Bitcoin, which is great, but it's not going to make a big difference compared to thousands of Bitcoin by other large companies. And at the same time, what's very important for us is that I don't want the future of Coinsilium to rely on one asset only. We wanted to give exposure to retail, of course, to different uh, opportunities, but the opportunities are more like entrepreneurial opportunities. So I don't want to just have an asset, whatever it is, and in this case Bitcoin, and just wait for it to go up. That's not I'm not a we're not a passive investor in any sense. We want to actively help entrepreneurs build their companies. So that's why we say from the start, we're not in that competition of having more Bitcoin than anyone else, or BTC yield, and all these kind of statistics that were created a year ago or 2 years ago. We are not in that race. We are very lucky, and we appreciate the fact that we have now a stronger balance sheet because of this asset, which is Bitcoin, and we are Bitcoin advocates from the very early days. So it fits our narrative. but we want to continue looking at investing. And if we need to use, in a way or another, this asset to invest, we will do it. We're not in the Bitcoin treasury race.
You now define Coinsilium around three pillars, right? So prediction markets, the agentic AI economy, and digital asset infrastructure. So why these three, Eddie, and why is now the moment?
Well, I mean, as you were saying, the broader term is frontier technologies, which obviously means that there will be maybe other technologies coming in at certain time. But I think at this time, these are the ones that we're looking at. Uh, Again, we have been careful throughout the history of Coinsilium to not go in sectors that we don't understand completely. Like, for example, we have never invested in Bitcoin mining. Uh, some of the reason is because we felt it was too capital intensive, and at the same time because there are a lot of technical matters that we're not very familiar with. But if we look at certain products, prediction markets, if we look at certain type of digital asset platforms, we feel our experience can actually bring something and we understand it better. So basically, we're going where our experience and the experience of our of the other directors, of the people we worked with, naturally what happens as well is that because we have invested and we have backed many entrepreneurs, and this happened from the very early days, even 2014 this was the case. We tend to back people in our close network because they know someone we have backed before, or they know someone we know. And that's also a reason why we're looking at this sector, because we know it's one network circle around us, it's not too far. So we know we have opportunities in that space.
Yeah, that makes a lot of sense. And Eddie, you also called the AI crypto convergence a $15 trillion shift. Where does that number come from, and who actually captures it? Incumbents, startups, or is it the agents themselves?
Well, you have different numbers. I mean, you have Gardner, which probably is one of the biggest, uh, let's say, uh, research company in terms of feeding a lot of data to very large corporations. And the other one is McKinsey as well, which everybody knows. So this, from the consulting companies to the IT research companies, are looking at a very large market. I also went to see Stripe, for example, in Singapore, and they also have their own numbers. But the reality is that this is a huge market, and the reason why it's huge is because they feel and they foresee that a lot of the transactions are going to move towards agents. And of course, if you start looking at transactions in general is huge. It's a huge market. Even Forex, it's trillions every day, right? Forex transactions are trillions every day. So when you talk about trillions, as soon as you talk about transactions, all the numbers go, very, very large. So yeah, so we got information from these reputable data sources, uh, but again, we want to find uh, opportunities that are our level. We don't want we are investing. I should have said that earlier, but we are investing pre-seed, seed, very early stage. We're investing with people who have experience and we believe are smart enough to make it, but very early stage. So yeah, so it's not easy to find in certain spaces, because if you look at Silicon Valley, you have seed rounds at $15 million for $50 million valuation company. This is not our sector. We go for reasonable valuations, and that's why obviously this cycle now is more interesting for us, because we find better value and we get more stake for our money, like any other investor in the space at this moment, because there is less capital, and because entrepreneurs understand that it's harder to get funded. So we can benefit from that as well.
Makes a lot of sense. Hey, Eddie, on this show, I talk a lot about robots and agents paying each other in
Mhm.
Bitcoin.
Yeah.
How close is the machine economy to being real? And what breaks first? Is it like the tech, the law, or the banks?
Well, the funny thing is that back in 16 maybe, or 15, 16, when I was going to Ethereum meetups in London, there were already many people talking about machine to machine payments. They were showing you can open a door, unlock your Airbnb with a wallet. I don't know if you remember, but Nick Szabo famous example was the car, where you can, if you don't pay the loan of your car, you cannot open your car, you cannot start your car. And I remember there was a German, one of the big energy companies in Germany, um, and one of the representative of this company was saying you could have an electric car, buy the electricity for the car, recharge using an Ethereum wallet. At the time, it was Ethereum because it was an Ethereum, meetup, of course. But so machine to machine payments probably has been going on for a while, and now, of course, with agents, it's going to be much larger. I'm not sure it's such a legal issue. I think it's more. I think it's a bit like the internet. It's more a mindset issue. We have to accept it. We have to accept it works, and we have to be reassured that there is a trust layer. And that's exactly what I was talking about this in Hong Kong a few days ago. I did a keynote on AI and blockchain convergence, and my uh, postulate, let's say, is that you need blockchain for AI and you need blockchain for agentic AI, because you need trust layer, because you cannot trust that agents are going to do exactly what you tell them to do. It's already happened many times with people's wallets, people data, etc. And of course, agents try to hack other systems or whatever. So you need the trust layer, and blockchain is the best one for that. It's going to record all the events or record all the transactions. And so I think it's a marriage made in heaven, AI and blockchain. And my feeling is, without blockchain, you couldn't have AI. And today, if you look at it, without Bitcoin mining, probably you couldn't have AI, because a lot of the Bitcoin miners did all the technology advancements. And I remember very early on when Nvidia was selling a lot of GPUs for Ethereum mining, or altcoin mining or whatever. A lot of the advancements we had in microprocessors came from crypto for mining. And and it's not a coincidence that today some Bitcoin miners are now powering the AI systems, the compute, because it's very similar. Is they're solving very similar problems, and they're using, and as you know, computational power for Bitcoin is the largest computational power in the world. So yeah, so I think a lot of convergence between the two, the, and basically I think you cannot have AI without blockchain.
That makes a lot of sense to me. Coinsilium recently said part of its Bitcoin holdings can be deployed as venture building capital. How do you decide when a Satoshi is better spent than held?
Well, it's the decision is not so hard, because in reality, if you look at the cycle, um, you can see that what we are living through, and actually what we wanted to see, is that institutional adoption. When institutions start adopting new financial instruments, new classes of assets, and they have done so with Bitcoin, the cycles start to get less dramatic. The cycles start to get more normalized. So we are, of course, we are still long-term believers in Bitcoin, but we also believe that there may be opportunities out there that are going to do better than Bitcoin. And again, we want to have the flexibility, the optionality of saying, well, if we need to invest in a company, we are going to use the assets of our balance sheet, which happens to be in Bitcoin at the moment. So it's never great to sell Bitcoin, I would say, because again, a lot of people think it has long-term value, and we also think so. But at the same time, we need to be able to make these decisions, because we need to make sure that we create value for our shareholders on the long term. And we believe that sometimes it would be better to invest in companies that have a larger potential. And And maybe after that, once we exit, we could come back to Bitcoin. Who knows? It's not a we're not in a monolithic world. We are in a space where there are cycles, and as you can see very well now with AI, where we have a Korean index doing meme coin type movements. 15% up or 10% down on a day. Well, actually, it shows that people are moving. The financial market is something flowing and going from one opportunity to another. And I don't think it's great to mentally just forbid certain options or make it too restricted. Yeah.
Yeah, yeah. Okay, Eddie. So what would you change about how public markets treat innovators, and where should the next kind of generation of builders list?
Yeah, that's a very good question. So the biggest problem with public market until now has been the friction, the cost. Unfortunately, a lot of founders they only think about public market as a kind of goal. It's not a goal. A public market is supposed to help you go to the next step, not the achievement. Um, it's also, and I was saying that to a lot of people in 2018 when we had the ICO craze. I was saying, be careful if you create a token. It's very similar to having your shares on the public market, and you get all the stress of the, and even more I would say with a token, because it's 24/7 exchange. You get all the stress that a lot of CEOs and management teams of public markets get, but without the slow curve, the slow learning curve to get there, because a lot of people did ICOs too soon and so forth. But I think public markets, the biggest problem has been the barriers, the friction, and the fact that it's still seen as an expensive ultimate goal, and it's not. It's just a phase of a company's life. So I think markets should try to cater more to earlier stage entrepreneurs. I mean, as you see, interestingly, what happens is a lot of um, successful startups. What happens is they get to very very large valuation in the billions, and then there is a very active pre-IPO market, which is going on right now with Anthropic and all these very trendy AI companies. So it means a lot of the people are almost exiting before the IPO, which is crazy. I mean, because they already made a lot of money. So I think it's not a very healthy environment. I think these people should work to the IPO and make sure that the retail investors at the IPO can also make money by going there with a more reasonable valuation. I think a lot of the too hyped up startups go to the IPO too late, because then we're talking about trillions almost, so I think it's broken in that sense, and it doesn't offer the opportunities to entrepreneurs to get early stage funding, and therefore the VCs are in charge of the early stage funding, and the VCs sometimes may try to control a bit too much the exit process, IPO process, etc., etc., which I guess is not always in the best interest of the founding team. So yeah, I think it would be great if we get around the world some smaller exchanges, maybe catering for smaller projects and earlier stage ventures.
Okay, awesome, Eddie. So Eddie, let's I guess bring this one home. Where do people learn more about Coinsilium? Where do people learn more about Eddie? This has been a really, really informative
Mhm.
interview, and yeah, thank you for answering all these questions.
No, my pleasure, sorry. Coinsilium, coinsilium.com. So coinsilium.com. Our ticker symbol in the UK is coin on the Aquis exchange. In the US, for those in the US, on the OTCQB, it's CINGF. We didn't choose that symbol, but it's there. And yes, and myself, Eddy Bitcoin on Twitter, and I'm on LinkedIn under my name. Yeah.
Fantastic. Well, Eddie, I'm so happy to finally get to meet you after knowing, following you for almost 10, 12 years. With that said, I'm going to bring this
Same.
one to a close. Thank you all. I see quite a few people are listening live. Thank you. And yeah, I'll be back later today as well with another interview. Thank you, Eddie. Eddie, hang out for 1 minute. I'm just going to bring the stream to an end. Cheers.